everyone. Hey, welcome to LMA Trading. This is Rick Hoffman here. Hey, today's Friday. TGIF, everybody. Hopefully, you have your coffee here this morning. And we are going to take a look. The markets have been waiting, and so have we. We're going to take a look at the job report numbers. That is what you should be seeing here on our screen right now. The numbers came in better than expected. The total non-farm payroll employment rose by 943,000 in July. They were estimated about 850, and the unemployment rate declined by 0.5% to 5.4%. So all in all, good numbers. The markets have been waiting patiently for this, especially this morning. There's been some anticipation, but we did see a spike in the 10-year Treasury bond that did go up above 1.2%. So let's take a look at the markets here real quick, and we'll take a look see how the markets are interpreting the numbers. We will take a look at the Nasdaq here first. The Nasdaq. This is a 4-hour chart. It went on to set a new high yesterday, but as of through the night, they just kind of consolidated, and then this morning they dropped. They pulled back rather heavily. Then after the numbers came out at 8:30, they popped up a little bit, and they're kind of holding right here at right now at 15,107, roughly 15,106. They're not, whether or not we're going to go back up and take out this high, the 15,172.5. Not real sure with the 10-year Treasury bonds. They're not really digging those numbers right now. So heavily, and then this is the tech sector, so we'll see how the FANG stocks react and things like that. So let's move on to the Russell. We've got a play in the Russell, actually to the downside. We have a call credit spread on the Russell with a strike. We sold the 22. We'll get into the Russell here towards the end, but we sold, I think it's the 2260 strike, and so we are approaching that here this morning. We have a price level on. No, I'm sorry. This is the YM we're looking at, the Dow. I'm sorry. So the Dow here, whether or not we're going to take out this high of 3582, but I would probably venture to say there's once the market's open, there's a good chance that we'll get some selling with the orders coming, or the buying with some orders coming in. So we'll see that. So this is still looking very much intact as far as the bullishness on the market. Now let's get into the Russell. The Russell, like I said, I have a strike at the 2260 sold on the RUT. We are playing that on the downside. So whether or not we will hit that here this morning, but it's about, the market's open in about 10 minutes. It's 9:20. So we'll see how this plays out. We are on the 4-hour chart at around the 2 ATR, as you can see here in the past. Let's zoom out a little bit. So usually when we hit the 2 ATR, this here's the Keltner channels. So when we hit the 2 ATR, we tend to pull back a little bit. So we'll see how this is where we picked it up here. So we've come down, and then of course yesterday we spiked, and we spiked up yesterday. So and so we'll see how that plays out here today. We'll make a determination, because if we get two closes above the 21, then that invalidates our trade. So we closed above it yesterday. So the VIX, let's look at the VIX over here before we jump in the S&P. The VIX has no fear. The VIX has dropped below 17. It's 1695. We have two orders waiting that have been good to cancel. One has been on there for about 2 or 3 days. We'll probably reevaluate that towards the end of the day, see how the VIX and the S&P handle that. We'll probably take that trade off. If it doesn't look like it's going to fill, we can't get the premium needed, we would be 7 days out. So we typically don't take them less than 7 days on the put credit spreads. And then we want to see the VIX pull back up into this area here, into the around the 20. If it's above 20, that's ideal for us. And The S&P overnight set a new high, so it set a new high yes overnight, which doesn't surprise me none. Pulled back here prior to the employment numbers, and then popped back up and opened back up here right at the 44.22 level, which is going to probably hold for support for this. And so this will be good. I mean, so we can reevaluate this. We may be able to get into a trade if we can get the credit needed on today. Maybe it won't be my dollar something credit. It might be my minimum of around 80, 85 cents. So we'll see if that plays out to maybe get in there for a 7 day play. If not, it might work well for our 10-year play, or I mean, not 7 year, 7 days and 10 days. And so with that being said, guys, that's what the markets are looking like to me. Just remember, investing contains risk. You're putting your money at risk, nobody else's money. So you've got to understand that anytime you get into a trade, the money that you have in the trade is all at risk, and you can lose all of it. This is for my own educational purpose for me. This is part of my trade journal trading plan, so I can go back and review these. I'm just being a nice guy and sharing this with you. My opinions of the markets are not financial advice. Don't take my word for it, because I am wrong most of the time. There's no way of trying to figure out which way this market is going to go. It has a mind of its own. So I just play the probabilities, and that's what options and credit spreads are all about. So playing the options and the probabilities of success, and just trying to figure out where the stock will not go. And right now, it looks like on the Russell, where I thought it wouldn't go, um, isn't right. So we'll see how that plays out. So with that being said, guys, have a great weekend. It's Friday, so enjoy your weekend. We will get back to you and talk to you next week on our Monday pre-market prep. Oh, we might even throw in an extra Sunday after the futures. I don't know. We might just do that. So with that being said, have a great weekend.